Hey Achievers, I'm Dr. Lakisha Simmons, and today I'm going to teach you how to invest with confidence. So this lesson, this series of 2 or 3 videos is all about choosing the most appropriate stocks for you because you know investing is a risk. So let's talk about how we can reduce our risk, how we can better manage our risk. So I used to be that same fearful person who was completely caught up in, oh, I don't want to take a risk. I just want to get a job. I don't want to do anything outside of that because I just want to be safe. Well, guess what? That's not safe, because when you're in a toxic work environment, guess what? That's not a really comfortable or safe position to be in. So I just show you this board here so that you can make your own board. I want you to look at what are the things that you want to have. Do you want to have the big house? Do you want to retire on the beach? Do you want to go to Greece? Do you want to take a bucket list cruise? This one in the middle here is me on my way to Thailand in the Q suites. It was just a dream. I was just teary-eyed because I couldn't believe that I was able to make this happen. And a lot of it was because of the stock market. So many things I've been able to accomplish and do because I have money saved and invested, and you can take that money out before retirement because not all of your money has to be in retirement accounts, and even some of those that are in retirement accounts can still come out. So let's take a look at Mr. Rich himself, Warren Buffett. You have heard the name Warren Buffett. Warren Buffett here is, oh my gosh, I think he might be in his 80s. I don't exactly remember how old he is, but Warren here is the 4th richest person in the United States, and he's one of the top 10 richest people in the world. And he got that way from investing in the stock market. And he himself has even said that sometimes just plain old index fund investing is a really good option for the average person. So he is the largest shareholder of his company, Berkshire Hathaway, and it owns over 60 companies, including Geico and Dairy Queen. So you've heard of both of those, I'm sure. So he's filthy rich. And it was because of the stock market. He chose some really good companies, right? And then Ray Dalio, I don't have a picture of him here, but he's also very, very successful, and you'll hear his name in the news a lot, and his predictions of what he thinks is going to happen next in the stock market is always really interesting. But he made his first investment at just 12 years old, and he has a net worth of $20 billion. And I just have 1 billion, half a billion, quarter of a billion, a little piece of a billion would be great, right? But I say all that to say that can be you too. Don't think that, oh, they did it, they have a different background. Guess what? I did it. I'm a millionaire. I'm not a billionaire, but you could get there. So many people get there. There's people around you, you wouldn't even know they're millionaires because they're not flashy. They're not private jetting it, and they could live right next door to you, but it's just because of how they save and invest their money. And I was talking to somebody about this the other day because we were talking about how, yes, Jay-Z may be, has money and, close to billionaire status. And I said, but that means that if they sold everything and liquidated, that's what they would have. They said, oh, really? It doesn't mean he has millions of dollars in cash in a bank somewhere? It's like, no. If he sold all of his companies and all that good stuff, that's where he'd be. So that's important to know when you're thinking about net worth. It's all of your assets together. So I do want to tell you that you will be able to learn to trade for income now. So whether that's dividends, whether that's just selling your stocks in a year because you've made 10, 15, 20%, depending on the year, right? It's not that high every year. Some years are negative and some years will be negative. But on average, the stock market has returned 9% in the S&P 500. Probably like, what is S&P 500? Well, don't worry, because we're going to talk about that in this lesson. Okay, so but I want you to know these are things you're going to be able to do. You will know how the stock market works. You're going to know all the buzz terminology. You're going to know how to use your capital gains and dividends before retirement to do things like go on a bucket list trip, buy a house, buy some investment properties, right? Just do whatever you want to do with the money, whatever is important to you. Start a business. And the most important thing we're going to do in the workshop of how to invest for fire or how to invest with confidence workshop is you choosing the right investments for you. Okay. And how Of course, invest without fear. So definitely check out all the videos and content in the workshop, the Invest with Confidence or Invest for Fire. I like both names, so I can't really choose. Maybe you can help me choose which name you like better. With part 1, which is how the stock market makes millionaires. Woo! That's what we want to be. Now, how did the stock market even work? How did it even begin? So the picture that you see over here under my video is something called an outcry. So the New York Stock Exchange started in 1792 somewhere between 1790 and 1792. And this stock exchange started with something called an outcry, where all the traders came together in this large crowd and they just yelled and used these hand symbols to buy and sell lots of stocks for their clients on a trading room floor, on an exchange floor. So whatever, if they were at the Chicago Exchange or the New York Stock Exchange, wherever they were, there was a trading pit, as you see here. And you've seen those movies where they're out there yelling and calling out different quotes and different things. So that's how it all started. But today we use electronic trading systems. There's nobody out there hollering anymore because we have technology. And now you as an individual investor can take control and do your own investing. So back then you couldn't. You had to go to a broker. And I think that's why there's so much of a wealth gap, because if you broker to make these calls for you, then you were just out. You couldn't be part of the wealth building conversation. So what exactly is the stock market exactly? What is it? So the stock market companies raise money to fund their companies, okay? To fund their operations, to build their inventory. If you've seen Shark Tank, it's similar to that, right? So they're there, they need sharks to invest in their company. But on a stock market, individuals can invest in these companies. All right, so Shark Tank is before they go what we call public and can be listed on an exchange where anybody can invest. They're kind of that pre-market situation. But once a company gets large enough and meets certain requirements, they can be listed on an exchange, and then everyday people can buy a portion of it, such as Amazon or Apple or Google or any of that you've heard of, Tesla. And then as those companies make money, they give some of that money back to their investors, or the value of the stock increases, which we call capital gains. Okay. So what exactly is stock? It is a financial instrument. It's an asset. It represents that you have ownership in a company. Now that just comes in the form of a statement from your investment firm saying that you own X number of shares of the stock or shares of a fund or an equity, right? So you can own a share of it. A share is just a piece, however many they buy of it, however many they have outstanding that are available to be bought and sold, you can get in on the action. So it really honestly does mean that you own a portion of the company. And if you own enough shares, if you own 70% of the shares, then guess what? You own majority of the company. So it's important that companies do well, because then your value goes up. Because if you own a certain number of shares of stocks, and as that company is doing well, selling new iPhones or selling new Android phones, and they're doing really well, they give some of that money back to their shareholders because they've used that money to help build their company and build new products. So here's the returns. I think it's important to always show this, and you may have seen this in some of my other videos, but it's important for you to know that the stock market sometimes goes down, sometimes it goes up. But here's the best way I can explain it. Let's say that in 2023, you decided to buy let's say $10,000 of stocks in Apple in early January of 2023. Well, let's say that Apple came out with a new iPad, they came out with a new processor, a new iPhone, and everybody just loved the devices, and they run and buy them up, and the company makes a profit. As they're making a profit, people also start to value the company more because they made a profit. So you may get some of that money back in terms of dividends, the actual profit, but it just may be that the value of the company goes up because now everybody loves the products and it's a really good stable company. We see them being around for a long time. Their financials look really good and strong. The leadership is really good and strong. By the end of the year, the value of that stock is now up 24%. So I'm just saying it for an example for 2023. This actually is the percentage return for the S&P 500. So that means that from the beginning of the year to the end of the year, you could have made 24% on your stocks. Now you can leave that share of stock there, and the dividends that are paid out to you, you can reinvest them into more shares, or you can simply take those dividends out and live on those dividends, because you will have to pay the taxes on those dividends in the year they are generated on the dividends. Not the capital gains and all that good stuff until you sell. Now, the S&P 500 over time, since it was established in 1920, has been up about 10% a year, and that's a pre-inflation number. So just imagine having 20 or 10% more per year on your money. So that's pretty good, right? That's what you call passive income. That's you still going to work or doing whatever you're doing over here, but at the end of the year, your money made 10%. That's pretty good. Okay, so this is a question that I always like to ask because it really puts everything into perspective. Would you rather have $47 or would you rather have $2,400 without working any more hours, without doing anything besides letting your money grow somewhere? Which one would you rather have? Well, of course, you'd rather have the $2,000. That's really the difference between saving and investing. Because if you had $10,000 and you invested the $10,000, then you would have had $2,400 by the end of the year for 2023. But if you had put that money in a savings account on January 1st, 2023, by the end of 2023, you would have only had $47. Of your $10,000 that you put in, you only got $47 back versus $2,400. We got to make some really big decisions here, right? You're going to keep putting the money in the savings account, or you're going to take some of your money and put it over in an investment account for your long-term growth. You got to think about that. Okay, so what's some of the ways rich, and would you like to get rich? Yes or no? Would you like to keep making $47 or would you like to make $2,400? Again, this is not get rich. This, you notice I said a year. You notice I said over a year's time, 10% over all the years. And that's because it's not today or tomorrow. It may not even be next year. If the stock market is down this year, you may not want to sell next year. Okay. All right. So capital gains. What is the difference between capital gains and dividends? That's a really good question. Glad you asked. So capital gains are basically when you can sell your stock for a higher price than what you bought it. We know anything in sales, anything in business, if you buy it for a low price, you sell it for a higher price, that's profit. When it's stocks, we call it capital gains. Okay. Now, dividends. Dividends is when profit is made at a company, they will go ahead and actually pay you money. You can still own the stock. And as long as you own the stock, you are eligible for those dividends. So when you get those dividends, you can decide if you want to put it back into the company or if you want to take it out and live on it. And your stock, you still own that same stock. Now, capital gains account for nearly 2/3 of all the equity returns. So when you saw that chart on the last slide of 24% return in 2023, about 2/3 of that is capital gains. And about 1/3 is typically dividends. Okay. So let's see, let's move this. Okay. So here's one of our participants for Roth IRA workshop. So let me just tell you that the workshops are shorter programs. So I have the Wealthy Achiever, which is 3 weeks or 4 weeks, but this particular workshop is, you can get through it in a couple of hours. It gives you some nuts and bolts. It gives you the high level information and you can hit the ground running. Very hands-on, but it's a bite-sized piece. It's not comprehensive. It teaches you everything about all money. That's what the Wealthy Achiever does. If you want to start with your budget, work through your 401k accounts, and then start investing outside of those accounts and learn about FIRE and how to achieve FIRE in 8 to 10 years, you want the Wealthy Achiever. But some of our shorter programs, workshops such as the Roth IRA workshop teaches you specifically about the Roth IRA. We had a Rhonda who was a participant. She loved it. So many of our achievers have been just keep giving me so many great testimonials about how much they love how I teach, my style, how much fun we have on the calls, and how they walk away learning so much, just knowing so much more than they ever even expected to. They thought they were getting a little bit and they got a lot. So this is a Rhonda. This is her testimonial. She wants to do this to leave a legacy for her children and even her grandchildren. She wants to be the person that breaks that paycheck to paycheck cycle. And I know there's so many of us who want to do the same thing. And I know that's probably you as well. So make sure that you definitely sign up, whether that's the Wealthy Achiever program or whether that is one of our shorter workshops such as the Roth IRA or the Invest for Fire. Whichever one it is, go to LakishaSimmons.com and get started. So if you haven't registered yet, what are you waiting for? Please, please, please go to the Achieve Her, because this is your chance to get all of your questions answered about what are the best stocks for you. So what we've been doing here is going through some of the background information, but in the workshop, there's a plethora of information on the stock market so that you can really learn the nuts and bolts of how it works and you can be a really educated trader. And of course, we're going to teach you exactly how you make those trades. So not only what type of investments are out there and available and what's the difference between them, how much to get started, and how to actually open the account and make the trade. Everything you need. Go sign up. Please go sign up because we have so much fun in these workshops. See you there.